Hello traders, FX Bright here, the trade guru. So on this video, I want to teach you guys how to trade the pullback using the Fibonacci tool. This video is going to blow your mind. If you are a beginner, this is one of the videos you don't want to miss. Listen, when you open the chart, what do you do? Once you open the chart, what do you do? Listen, I'm going to simplify this to you. At the end of this video, you'll be able to go to your chart and take trades right now and make profit. And if you do, I want you to come to the comment section and tell me how it goes. I'm going to see you guys after the intro and the disclaimer roll. Alright guys, so first of all, what is a pullback? A pullback is just the temporal move against the current trend of the market. For instance, you know the market doesn't just move straight up like this. You understand? If the market is going from point A to point B, it doesn't necessarily need to move straight up. So what the market does on its way from point A to point B, what the market does is it moves in waves. So it goes up, come down, goes up. Remember, it's just going to point B. But on its way to point B, you see the market doing all this. So you can see the market going up, coming down, going up, coming down, going up. So these parts, these times where the market begins to come down, these are called pullbacks. And this is how to take trades in the market. Now, because the market is going up, doesn't mean you're going to buy. So the market is going from this point to this point. But what you will see is that the market doesn't just move from this point to this point. It goes up in waves like this. So this particular time when the market is coming down, these are called pullbacks, right? So you can see where the market was going up here and drop down. This is called a pullback. So what do you trade? If you're going to buy this market, the only time you're going to enter a buy in this market is when the market has made a pullback. So in this pullback is the time you now place your buy on this trade. So I'm just going to go into the chart now to show you guys how to trade the pullback, how to spot these pullbacks, and what exactly are we supposed to do. So let's go into the charts. All right, guys, so let's take a look at these examples. What you will find in this particular trade, this particular chart, is you can see how the market was able to come down, go up, do all this drama. But I want to examine this chart so that you can be able, as a beginner, you want to be able to understand fully what the market has done or is about to do. Now, when you open the chart, what you're going to do is you're going to draw a trend line just to, first of all, capture the immediate move of the market. Now, we are assuming this is where the market is, right? This is just a price chart that happened in history. But I just want to go back there to examine it for you guys so you can be able to understand what the market was doing. So you can see how the market was able to come down and make all this move. The first thing you want to do, now I'm assuming this is where the market is currently, right? Just assume this whole place has not formed. I want to show you guys something really important. This will help you. This will change your trading. Now listen, the first thing you want to do is that you want to first of all capture the trend in which this particular place was moving. There are two things the market is supposed to do for you. There are two ways to trade pullbacks. First of all, if the market is going to change the trend, there are some things you want to happen. I'm going to show you the other version. Now look at this. Now I said I'm assuming that this is where the market is currently, right? So what the market was doing is that the market is going to break this trend. There are two things the market needs to break. It needs to break this trend line and needs to break the last swing high that brought the market down before it broke the trend. What I'm saying is this. So you're going to pull out your zone tool and zone up this place. Now look at what I'm talking about here. The price is going to break two places. The price has to be able to break this trend line. You can see that the price has been able to break this trend line. The second thing the price needs to do is the price needs to break this swing high that brought it down. Now, if the market has not done this, you are not going to trade the pullback. Trading is one of the easiest things to do if you can just forget about all these indicators people are selling to you and understand what the price is doing. Like, I've made a lot of money trading price just as price action than when I was trading it using all those bunch of indicators. So guys, understand this what I'm talking about. What the market is going to do is that the market has to break this trend line first. Then the second thing the market is going to do is that it's going to break this swing high. So this particular swing high that brought the market down, the market will break this two. The moment the market has broken this two, it is at this point you're going to start looking for a retracement, right? And now this retracement we are looking for, we're going to have to capture it in a Fibonacci ratio. Now look at this. People don't know. Now people are confused what Fibonacci ratio to use. Some says, there are what you call the three golden Fibonacci ratios, which are the 38.2, the 50, and the 61. Which one do you use? Now I'm going to show you the exact way to spot exactly what to use in the Fibonacci. You're going to pull out your Fibonacci. Anytime you see the market is making a retracement, you're going to pull out your Fibonacci. Now you're going to wait for that your Fibonacci to touch the 38.2 Fibonacci first before you will call it a retracement. So I just draw the Fibonacci all the way to this top. I drew it from this bottom all the way to this top, and let's see where the price was able to get to. Now if you look at this market, you can see the price didn't retrace all the way down to the 38.2 Fibonacci. So I will not call this a retracement yet. I'm still going to allow the market buy. Remember, I want to buy this market, but I want to buy this market at a retracement, right? So because the market retraced to only the 3.6 Fibonacci, I'm not going to buy it. I want the market to retrace to at least the 38.2, the 50, or the 61.8. But even so, I want the market to retrace on it, touching a valid support. Now look at what I'm saying here. If you look at what this market is doing, it was able to retrace all the way to this 23.6 Fibonacci, and that's not valid enough for me. So I'm going to allow this market to still continue buying. Even when it starts buying, I'm not going to buy yet. I'm going to wait for the market to get to another point and give me another retracement. So you can see the market was able to come up all the way to this point and started coming down. The moment I see the market is also coming down from this point, what I do is I'm going to extend my Fibonacci to that top. So you can see I'm just putting the Fibonacci on that top. Now look at this market now, it's coming down. From this point, it's coming down. Now, I only want this market to come all the way down to at least the 38.2 Fibonacci. Now, I'm not going to take even when the market gets to this 38, like you can see how the market was able to come down all the way and touch this 38.2 Fibonacci. Now, because it touched this 38.2 Fibonacci will not also be the reason why I would take the buy. Now, the reason I will confirm this buy is that when I look to the left of this market, now, assuming I got to this point, when I look to this left, I should be able to confirm a price, that place being a support. Now, you can see how just about recently, price was making a support on this zone. Now, see, as the market is coming down all the way to this point, and I look to the left, I can see how the market was able to bounce and resist on this point, and it was able to also do some drama in this point. So I can tell that this, even when the market retraced a little bit here, this point was able to still bounce the market up. So I can tell that this point was a good support zone. So anytime the market is coming down, I'm going to draw that zone area on this side and allow the market to come down there. But what must happen is that point must be a valid Fibonacci ratio. What I'm saying is at least that point must be on the 38.2, 0.5, or 0.6. Any one of those points is where I'll be taking that trade as far as it coincides with a valid support. I don't know if you get the point here. So it is at this point I will start finding my buy entries. Now guys, if you want to know exactly how I take my trades, my entry reasons, my the way that I take exactly all the trades, you can also DM me for mentorship. I would teach you my step-by-step process on how I analyze the market and take entries every day. And I have a lot of students that have registered all the way from this YouTube, and they've been profitable. So guys, this is how you take the trade. So when the market gets to this point, the market begins to buy. You find an entry around this point and the market begins to buy. Now look at this, for instance. Now assuming the market was able to get to this top here and start retracing again, where do I want the retracement to get to before I might begin to buy again? Now remember, I'm still going to extend these lines because this is the valid support from this side. right? So the moment the market was able to get to these points and started retracing again, I'm going to take out this Fibonacci and I'm going to put it on the top of this point. Now there are two things I need the market to do. I need that the market, as it's retracing, I need it first to get to the 38.2 Fibonacci. You can see here is the 38.2 Fibonacci. I need the market to get to the 38.2 Fibonacci, and I need also the market to touch the 50 Fibonacci. So the moment the market was able to get to the 38 and touch the 50 Fibonacci, it is at this point I will start looking for a buy. Now, how do you look for buys? That is now the next question. Now, I want to give you guys a secret. Never take a trade if the market, now this is a secret. Never take a trade if the market just falls down to your point of entry. You must allow the market to move in waves. So look at this. For instance, if you look at this particular point, this 15 minutes time frame, all the way from here, the market just dropped down to this point. The market is not going to buy up straight again. The market has to move in waves. So what do? You're going to wait for the market to give you its first wave. Now I'm showing you guys this stuff is look at this. You're going to wait for the market to move its first wave, and you're going to draw a trend line. Right? Now listen, guys. Once you draw the trend line, there are two things you need to happen. You need the market to be able to break the trend line and break this support, just the same way you did for this part. You need the market to break the trend line and break this swing high. The same way when you draw this trend line, you need this market to break this trend line and also break this swing high. So I'm going to put a horizontal line on that swing high. So I'm going to put a horizontal line here on this swing high. So what I'm saying is this. This is the swing. You see the market came down to this point, came up. Let me delete this Fibonacci so you can see it very clearly. You can see how the market came down here, came up, and started dropping down. Once I draw this line, I need the market to break this trend line and also go up to break this swing high. So you can see what I'm talking about. The market has to go up to break this swing high. The moment the market is able to break the swing high, then goes up and make a retest on that support zone, is where I'll be taking my buy. So you can see how all these places I would have been able to avoid all this trade until the market comes up to break the swing high, makes as little retest. The moment I see any buy pressure, you take your trade. You take your trade all the way down, so you can take it up to 161 or 100 or whatever Fibonacci ratio you're comfortable with in your back test. So guys, this is how to trade the pullbacks. So I'm going to show you guys another way to trade the pullback. Alright guys, so let's take a look at these other example. Now I just want to show you guys something real quick, just how to trade the pullback when the market is already in a trend. So assume this market is already in an uptrend, as you can obviously see. How do you trade the pullback on these types of trend? So it's just about the same ideology I was showing the other one, but just the other one I was trying to show you how you first of all make sure that the market has begun a new trend. So in that trend, which is something like this now, going up for instance, you'll be able to also trade the pullback. So let's assume the price was able to make the 1, 2, 3 move and is now going up. So now you can see the market is coming down now. Right, you can see the market is coming down. How do you trade the pullback when the market is coming down? The first thing you want to do is that you want to first of all be able to gauge the support and resistance level. So if you can look to this side of the market, you can see how the market was able to come here, hit, did some drama here, and came down. And obviously from this point, you can be able to zone out this area as being a possible support zone for the market. So just by having this zone, first of all, you can be able to be assure yourself that the market has to first of all get to this zone. Now, in case this zone did not touch the 38.2 Fibonacci, even if the market gets to this zone, you will not take the trade. You're only going to take the trade on a market that at least got to the 38.2 Fibonacci or the 50 or the 61, any of them. But those two must coincide, those two must confluence together, they must align together. So what we're going to do is that as soon as the market was able to get to this point, we're going to take out our Fibonacci tool and we're going to use it to guide this Fibonacci. So we're going to draw it from this point to this point, and what we want to just see is that the market got to the 38.2 Fibonacci. So you can see how the market came down, hit the 38.2 Fibonacci, came all the way down to this 0.61.8 Fibonacci, which is also a valid Fibonacci. The moment the market is able to come down to touch this point, remember, What is making us to use the Fibonacci is not because we are just waiting for it to touch 38 and we start entering, no, or to touch 50 and we start entering, no. We want the 38, the 50, or the 61 to align with a valid support zone or a resistance zone that we can see. The moment the two of them align, that is the moment we'll be thinking of our entry. So the moment this can happen, we have already started finding the entry. So you can see the price was able to make a double bottom on this point, and this is where you'll be able to take your buys from. So the moment, normally, if you have seen my video about double bottoms, you will understand that the moment you see a double bottom, you quickly just draw your lines. The moment this market is able to break through this this line, you're taking your buy, and you're taking your buy all the way down to the 100 Fibonacci or the 161 Fibonacci, and that's how you trade, guys. So how do you trade the pullback? First of all, get your support zone. The second thing you need to do is to wait for your market to break through at least the 38.2 Fibonacci. Then you'll be able to see the confluence between the Fibonacci zones 38.2, 50, and 61, and that support and resistance zone. So at that point, once the two of them are able to confluence together, that is when you go and find an entry. And the moment you get an entry, 99% of the time, you're going to be finding a very good sales or buys. This will give you very good profitable trades. So I hope this tutorial was helpful for you. So guys, I'm going to see you guys in my next video. Like and subscribe this one.